Good morning. It is Friday, August 16th. I just made a joke that we're going like free balling it today. We're going commando, no pants. I do have pants on, but that's kind of I'm winging it today. I do want to make an announcement. Josh Brown put this out there on his Instagram and on his LinkedIn. The fake chat room scams impersonating Wall Street people have now jumped from Facebook, Instagram to LinkedIn. I am not on LinkedIn. I may start a LinkedIn page. I am going to start anything, it will be on Linktree, linktr.ee/dailystockpick. If there's anything, it's there. If you're getting reached out to from somebody that's impersonating me, it won't be me. I don't reach out to people. I react to people. I'm not somebody who reaches out. I'm not somebody who starts a Discord group. I'm not somebody who has Telegram. I'm a boomer. So be careful. Be careful. Josh says Meta and Microsoft are reporting record profits in part because they're investing in security. Impersonators are buying sponsored posts and sending DMs to entice you to join private WhatsApp groups where they pump penny stocks and crypto and God knows what else. Protect yourself. And he lists that stuff. I'll put it in the newsletter so you can read it. Again, if there's anybody out there, I'm not reaching out to you. If you do reach out to me, I do respond. But make sure you reach out to me from the Linktree. Any of these, my email address up here. You can reach out to me on any of these social media programs that I have. Facebook, X, Twitter, Twat, whatever it is now. You can reply to me on Spotify when I post that. You can reply those comments. That's me responding to you. But I am not starting a freaking Telegram group. I don't use WhatsApp unless somebody else tells me to use it. So I'm not reaching out to you on WhatsApp. That's it. Now, markets, I will go into. We've made a complete turn. We have gone, August is now positive, probably going a little negative today. Because we've had this run up. 450 is still on the Qs, our support level. 471.76 was the August opening. We are at 471.85 in pre-market right now. Still means we're positive. We're positive for August. Does that mean the all clear has been signaled? No. But we'll go over a little bit of that. But what I want to start out with is Trendspider. And I don't want to sell you on Trendspider, okay? Yes, you can sign up for Trendspider, but I want you to start with trendspider.com/university because there are courses over here, okay? It's Trendspider platform courses. It's core case use sport, finding trading opportunities, automating workflows, alerts and trade, case deep dives, timing trades, but there's also technical charting 101. And these are just basic courses where you don't need Trendspider to actually look at this stuff. I want you to go to trendspider.com/university. Now, if you sign up for Trendspider, then you're going to go over to the Linktree and click on this. It should put a cookie on your thing. It should put, it's a special link that gets you there. It identifies you. And then you're going to sign up for Trendspider once you do that. This has the best deal that you're going to get. Okay? The best deal that you're going to get right now, $53 a month. And that's but when you pay annually, you save 50%. But you don't need to pay to look at these courses. To see if you want Trendspider, go over here. These are all free. And the actual university is free. They have blog posts about what's going on. They also post their own charts about where the market's going. Trendspider is a tool that you don't necessarily need to pay for, but if you want the chart and you want the 4-hour algorithm, the 65-minute algorithm, all my watch lists, everything that I scan, yes, you need to sign up through me. And they do have a special. You're saving up to 50%. Okay? This middle one is the one that I suggest. $98 a month. It's 100 simultaneous alerts, okay? 90 days of max lifetime alert. 30 simultaneous trading bots. You can trade on a trading bot. I personally don't. I absolutely do not. You have 10 active windows. If you want just the standard, you're going to get 30 days of a max time frame. You're going to get 30 simultaneous alerts. Look at the difference. Decide which kind of trader you are. But again, if you're new to trading, technical stuff, I would go over to the university and look at that. And I'm going to show you how to use Trendspider by using the charts, but I would absolutely go over there and look at that. One of the best tools that Trendspider has is the anchored VWAP. Okay, VWAP, it stands for volume weighted average price. And it just takes the volume, the average volume with the price, and it says, okay, based on the average volume weighted, this is the price that it is. Now you can see this blue line right here is the anchored VWAP. And it's anchored back to January 2nd or 3rd. I forget when the stock market opened, but it's anchored back to the 1st of January. And how did we perform? You could have timed the bottom 3 different times this year. Once back in, it looks like late April, once in May. You could have bought during this time. You could have also done it this time. Okay? I don't use anchored VWAP. My point is, I don't use a lot of what Trendspider has. I probably should because it's so good. Again, everybody will say anchored VWAP. I'm not going to show you how to set it up because I've got my own system here, and this is the way I look at things, okay? These lines right here. The first line is the high that we hit on March 20th, 2024 until we pulled back. There's the April. We talked about the anchored VWAP. That's the pullback that you saw. My 4-hour algorithm got you in. I don't use the anchored VWAP. I use my 4-hour algorithm. You can use both. You can put both on your chart if you want. You could load this crap up. What am I showing here in the middle yellow line? That's 471.76. That is where we opened August. We are now negative. We're positive, 472.17. So we're positive for the month. We made a complete round trip. What's this top line? 502.28. That's the all-time high. Are we going back up there? Well, this purple line shows you where Trendspider thinks the direction is going. And yes, it's pointing up. I will tell you, I don't use that line whatsoever. I like the Bollinger Bands. I like the moving averages. I like the MACD. I like RSI. All of those things are at the university, and you can read about them. Okay? But the anchored VWAP is interesting. It's perfectly set up, and they'll show you that. So learn your charting and understand exactly what it is. Like I said, we made a complete round trip. The Walmart CFO, I put it in the newsletter yesterday. The newsletter is absolutely free. And this is, during the week, it's absolutely free. I tell you to support me on LinkedIn or Linktree to try and do that. But I posted this yesterday. Now, the Walmart CFO, after I got off the air, I found this out. He said, it's prudent to be cautious, but we are not predicting a recession. That's huge. That's enormous for this market. Enormous for this market. And that's what you saw yesterday take off. This is why you want to be in the market. Yes, I sold out of a bunch of stuff. It didn't change my percentage that I was in the market. Again, a lot of those sales that I did were smaller in my portfolio. XLY in my retirement account, which I told you I sold out of, that was up like 2% yesterday. I regret selling it. I will have an opportunity to buy it back. I didn't listen to the 4-hour algorithm. I just didn't listen. Again, that I didn't want to sell into weakness. I got nervous. I let emotions take me over. The 4-hour algorithm in XLY had a buy yesterday. And now I sold out at 176, somewhere in that neighborhood. It's at 182. It gapped up. I'll have a chance to buy it back, I do think. I don't know. This isn't, in my mind, it's not the single to load back in. I am dollar cost averaging my way back into some things. I will stick with my core stuff. Uber, I sold at 69. It's at 72. Not the end of the world. I bought it like 40. I think my average purchase price was like 32, 33, somewhere in that neighborhood. But if Powell negotiates a soft landing, that is the most brilliant thing I've ever seen, and nobody predicted that he could do it. So I think it's interesting. Now, let's talk about Seeking Alpha Premium, because the second link on this link tree, linktr.ee/daily stock pick, it's Seeking Alpha Premium. And I want to show you, there's an email. It will be in the newsletter. And I think I put it in yesterday as well. I'm putting these in there daily just to show you what's happening. Now, it might have been the day before. There it is. Yesterday, we got MPLX, a buy to strong buy. Today, we get a couple of rating upgrades. We get a rating upgrade on XLK, which goes from hold to buy. Okay, we get a rating upgrade on the XLY, which is strong sell to sell. And then you get, we can go into Seeking Alpha and look at this. So you go to XLK. Okay, say you go to XLK right here. The quant, when you get Seeking Alpha Premium, it's going to pull up this rating summary on the right-hand side. And you're going to see the quant says buy. It was hold yesterday, okay? XLK is a buy. You can look at the quant. It changed. Yesterday, it went from a hold to a buy, 3.92. Momentum, A-. It's got good. When you look at this holdings, that's what you want to see. Microsoft and NVIDIA are 41% of this ETF. So if you hold XLK, you have incredible exposure to NVIDIA, 20% of it. Now, XLY, they went from a strong sell to a sell. We can look at the difference here. Look at the two. It's Amazon, Tesla, and Home Depot. That's what? 9%, 24%, 45% of that are those three stocks. 45% of those three stocks. When you go to summary, you can see that the quant rating has it as a sell. When you click on sell, you can see the scores that it gives it. Sell right here. Okay, it was one day. It went from a strong sell to a sell. I sold on the strong sell. Got upgraded. Bad me. But I like that. That's one way you can use Seeking Alpha is import your portfolio. And when you use this link, you save $25 and you get a free 7-day trial. Okay, that's one way you can use it. Another way you can use Seeking Alpha, and a lot of this stuff is free, by the way, just the quant is different. When I go find and compare, I found PSIX, okay? This is a screener where it will screen, and we're going to go over another screener that I built, and I'll include that link in the newsletter. But PSIX, and I was just noticing this the other day. And then all of a sudden, Brian last night in the private Facebook group brings up, hey, PSIX, I've made a fortune on this in the last few days. I noticed this a couple of days ago. Okay, we can look at PSIX right here. We can go into the quant and see when it was a strong buy. You can see across the board, it's a strong buy. Now, the market cap on this is $333 million. There are Burger King franchises that make more than that in a day. But you can see the quant moved it from a hold at $11.20 to a strong buy at $12.41. Okay, it's moved to $14.53. It was up 15% yesterday. Now, if you go back to Seeking Out, Trendspider, PSIX, ironically, this one's a killer in my algorithm. So again, these two tools together, and this was what I was doing yesterday. I was like, how did I miss this one? Well, PSIX is now on the watch list. So if you sign up for Trendspider and you import the daily stock pick watch list, it's now on your watch list and you can scan. And today we got an entry here at $14.20. You're at $14.52. Now, past performance does not indicate future performance, but it's the best indicator we have in the stock market. And when you look at this, what I'm going to do, remember how I said I don't use anchored VWAP? I do use volume weighted average price, and it's a slider here in Trendspider. I'm going to try and grab it. There we go. And I'm going to move this to where it really broke out right here at $2. Let's see. The entry here on May 6th, I'm going to move that there. What this does in Trendspider, it gives us a volume profile over here on the right, okay? And I looked at this one before and I said, okay, $8 it's trading in between here. If you go and look at the weekly, you can see it's trading in between those two. That's the previous all-time high, and then you got it going all the way up to 20. So you've broken through that. I've looked at this one before. I know somebody brought this up. But again, it's going through this one, and $14.20 is the most recent one. You can see right here, the MACD is resetting itself. $14.20 is the buy. Right now, you're trading at $14.52. But the buy was in there. This is how you use those two tools together, is you can find stocks like this. And when you use this volume, I would tell you, look at that volume profile and how many people are holding this between 11:21 and 1170. That's the big marker. Now, when you're getting up into this new area up here, it might be a little bit of a scary ride because you don't have volume profiles up here at all. You could pull the volume weight back to the previous time when it was trading back there. But again, that's how you use this. And I just noticed this the other day. I just literally went to top stocks and I said, what are the top stocks? That's what's interesting. So again, that's how you use it. But PSIX was brought up last night. I thought it was interesting. If you're somebody who just doesn't want to look at this stuff, then the third one is Alpha Picks. The third link right here is Alpha Picks. These are 2 stock picks. Okay, one on the 1st of the month, one on the 15th of the month. It's now the 16th. We had one yesterday. Okay. Before I announce this one, it is here's the Alpha Picks performance: 114% versus the S&P at 38%. You get 2 picks per month. They alert you when to sell. It covers multiple sectors. Okay, I'm going to read this one to you. I had no idea that this company even existed. The tech sector was punished amid the August global market sell-off, but this top application software pick was unfazed and is up 25% over the last month. Yes, the quant picked a stock that was up over 25% over the last month. Now, this is just, again, you get all of this analysis when you sign up for Alpha Picks. Now, the tech sector was punished amid the August sell-off. It was up 25%, posting record-breaking quarterly revenue of $228 million. That's a 32% increase year over year. Their EBITDA margins rising. Leveraged AI to transform businesses' marketing strategies. Wall Street analysts are bullish on this stock. It's expected to generate more than $80 million in free cash flow through full year 2024. Okay, Seeking Alpha's factor grades showcase the company's excellent fundamentals, strong growth, incremental momentum, and upward analyst revisions. If you want to know what this company is, sign up for Seeking Alpha, Alpha Picks. These are 2 separate subscriptions. Okay, when you sign up for Alpha Picks, you get the hand-picked portfolio. That's it. When you sign up for Seeking Alpha Premium, you get the quant rating and you can find the portfolio that you want. And again, we talked about building your own portfolio yesterday. If that's of interest to you, get Seeking Alpha Premium. If you just want a portfolio hand-fed to you and told to you when to sell and when to buy, that is Alpha Picks. And the only reason I support Alpha Picks is because of that portfolio, the performance. I'm not a big fan of, hey, I'm going to text you when to buy and when to sell. You get the absolute analysis of the company. You can decide. You can decide not to buy or not to buy. And that's what I like about Alpha Picks, is that it's proven itself as a great tool. And yes, Patty, you can go into Alpha Picks and look at their year-to-date performance. If you're signed up for Alpha Picks, you can go in there and look at their performance. They calculate it, and it's just click buttons. But I can't go in there live on air because I'll show the Alpha Picks, and then they yell at me, and I get in trouble. So take a look at that one. This one's crazy, and this stat in particular is nuts. JP Morgan today, or yesterday, because, hey, I saw this yesterday. Retail traders have bought the dip to the tune of $1.8 billion, with $1.3 billion of that going to 4 names: Tesla, NVIDIA, Microsoft, and Palantir. Yes, 4 names. Now, they are all in the core portfolio. All in the core portfolio. So if you've bought the dip, that's great, fantastic, do what you want. Biggest movers of the day: H&R Block surged 10% following impressive earnings. AST Space Mobile, ASTS, continued upward climb, rising 3% in pre-market after closing 50% higher the previous day. The company's Q2 earnings met expectations. ASTS. I will not put this one in a portfolio of mine. I would tell you, trade it. It is a huge gainer. And yes, it's a fantastic stock move. People have made a lot of money in this name. The 4-hour algorithm has you in at $2.60. Get ready. This stock is trading at $31. $30.76 right now. Okay? Yes, the algorithm had you in at $2. Did you know to get in at $2? I don't think so. Again, ASTS, it's a crazy. It's not making money. This is, in the Wall Street, it says it's a strong buy. The quant says it's a hold. But it's getting it's going up into space by itself. In pre-market, again, you're at $31. It is crazy. And part of this is I think it was AT&T chose them as they're when you're out and about, they're going to do space satellite texting and stuff like that. That's who they chose. So it's going to be a good company. Their market cap, $8.45 billion. Again, we talked about market cap. It's in, I'm a big cap tech investor. When you look at Wall Street as a strong buy, there are 5 analysts that cover this. And again, this is part of Seeking Alpha Premium that you can take a look at. But there's 5 analysts that cover it. Their average price target, $24.20. This is a hype stock. So it's a hype stock. But it doesn't mean that it can't continue up. Look at that. Up until AT&T picked them, this was a stock that was upper left to bottom right. Now all of a sudden, it's bottom left to upper right, and it's on a steep trajectory. But again, I would be very, very careful in this one. But you can use those tools to look at this. Now, AMD, it had the first death cross since March 2022. The stock fell another 50% after the last death cross. Death cross, all of that stuff's covered in my education section. Somebody below asked what a death cross is. A death cross is the 50-day SMA crossing the 200. You can have EMAs. I like to use SMAs. You can go on Investopedia.com to look at the difference. But the 50-day crossing under the 200-day, and it's crossing, okay? The stock is in a rebound, but it's crossing. And this is on a daily chart. The stock fell another 50% after the last death cross. That was right back here in 2022. Okay, we were in a different market. You were during rising interest rates. You were during where they had just stockpiles of semiconductors that they couldn't sell to anybody because there was over orders. But is that what's in the nature of this one? Look at how many steps you had where you had time to trade this one. Okay, that's where you want something like the 4-hour algorithm. Because the 4-hour algorithm will help you trade something like this. It's a strategy. You can build strategies in Trendspider and backtest them, okay? This one, if we're going to fall another 50% off of this one, in this one, when you backtest 24.5 months, you make 18% on 31 positions. So it's just a little bit over once per month, maybe 1.5 times per month. If you bought and held AMD, you made 49%. But if that death cross is any indication, and we're about to fall another 50%, you want to trade some type of algorithm. And again, you look at this weekly. Now, we're in a strong weekly upward trend, but this one could come back down. The 200-day is back down at 108. If you don't think that this one can come back down to the 200-day, look at how it performed in 2022. Again, are we entering into a weakness in the semiconductors? I would argue that no, but AMD is a different animal than NVIDIA. NVIDIA is an animal of its own. So that's another semiconductor that I want to point out, that I pointed out the other day, Micron. Micron is at 107. I was saying get this one under 100 or close to 100. That $97 was clear. Now the $91 that the algorithm got you in, fantastic play. You're trading at 106. Okay, that is just in a few days. This was August 9th. It got you in. Now you had we talked about the 50-day. My 50-day is the blue line. The 200 is the red line there. And you had the death cross. Did it mean something? I don't know. I mean, look at how far it's come back up. Now you take a look at a weekly chart and you say, okay, well, where are we on the weekly? Well, we've used that 50-day as a support level and it's bounced back up. And whenever you've been under that 50-day, it's been a good buy. So another one that I said, hey, this one looks really good is Dell. I'm in at Dell at 130. This one's at 110. 113 is where I'm in. Okay. Why am I not buying at 110 when I was buying at 113? I probably should. I should have bought at 92. Again, I said Dell. The problem is that Dell is going to report earnings later this month, August 29th, after NVIDIA. And if their margins are down because they reduced their margins on the servers, like SMCI, and there's a high cost to business, if that's the case, this one's going to get killed. I think the valuation on this one makes sense, though. Again, I think the valuation on this one makes sense. The valuation on Micron, they're still not making money, but when they turn to positive, and they very well may turn to positive, that one's going back to 200. But here, Dell, strong buy. The valuation is the only thing that doesn't make sense, and the only reason it doesn't make sense is because of the dividend yield. I mean, the dividend yield is the only thing that's down there, and I have no idea how the valuation comes out to be a D. None. The peg forward, 1.21, you're 37 below. The actual peg for the trailing 12 months, you're 70% below. Now, the one thing that I will tell you is that the profitability, if that gross profit margin goes down from 23% like it did last time, the last earnings where it got killed, you're seeing the last earnings back here in May, where it went from 174 and it's just continued its slide down. That is where the margins went down. And that was what took them out. So you want to take a look at that one. Those are two stocks that I think are just going to explode here when NVIDIA reports. I think we're still in the early market of this, and I think those two names are fine. I also think SMCI is fine. I'm holding on to that one. Dividend roundup. Everybody asked me about dividends and REITs and blah, blah, blah. Do you want dividends? Well, if you want dividends, here's a roundup. Walmart, Home Depot, Chevron, Hasbro, and more. They all upgraded their dividends. These are dividend increase. They declared dividends. So here's the dividend calendar, the X date, and the payout date. If you're interested in dividends, this is the article for you. Go and read it. We brought up PSIX. So we looked at that one. Earnings. AMAT. AMAT announced their earnings. Let's look at Earnings Hub, because AMAT announced their earnings yesterday afternoon. I thought it was good. The problem was that in the current market, their gross margin should have been more. Again, they should have been more. They're down 2.88% in the pre-market, but you can see they beat by 4%, and they beat the revenue by 1%. I don't think this one's a bad play. Again, these are guys that make semiconductor equipment. So all of the fabs that are getting built in this country, they're buying Applied Materials. You had a Death Cross, and I said this was kind of a coin flip. The 188 was a great buy, but now you're trading at about 212. I don't know where you go from here. I don't know the company well enough to know, and I haven't traded it. I don't own it, full disclosure. But I do think that 213 provides you some resistance, and you can see it's down at 204 right now, 204. So it's pulled back quite a bit, 3.5%. Do you want to buy it? I mean, again, that Death Cross of the 50-day hurting a little bit. The RSI is at 63. I think you wait for 3 days to see where this one shakes out. If it gets under 200, okay? If it gets under 200, I think you could buy this one. Because look at the weekly. The RSI is at 52. We're going to get a lower RSI. We're going to get the MACD resetting. And when the MACD resets on this one, I think it's a good one to buy. This is Applied Materials. I very well may start buying this one because I do believe in the semiconductor trade. It was just an interesting one. We can take a look at AMAT in Seeking Alpha. AMAT right here. It's a quant says hold. And the reason it's a hold, we can look at valuation and growth. Their growth, and that's what I said is that growth portion. Their revenue year over year down 0.51%. Forward they're expected to grow by 5%. The sector's 6 point. Now if you're looking at semiconductor equipment like me, and you're like, well, I don't exactly know this space real well. KLAC is one, KLA Corporation. I know that one. They're a big one. You can sort by market cap. This Nova, NVMLI. You can go and look at that one. That one's actually got a buy rating, a strong buy rating. And you can see how it's going bottom left, upper right. Over 1 year, you're up 100% on this. We can take a look at the quant and see when it actually turned into a strong buy. It was at 223. You're trading at 236 right now. Not a bad move. Let's see when their earnings are. This is NVMI. Let's see the chart. We can look at the chart. Go over from Seeking Alpha to look at the chart. NVMI. It's a good-looking weekly chart that just flashed up. Let's look at the 4-hour. The 4-hour had you buy in right here on its earnings at 184, and you're at 236. So again, that's kind of how you use these tools, and you go down a rabbit hole. Social requests. Jacob from Spotify. Thanks for everything you do. Can you review SCVL? I think it's SCVL. SCVL is Shoe Carnival, shoe company. SCVL. Discount retailers are actually doing really well. This one I don't know anything about. Algorithm makes you 33% versus 77% buy and hold. That's a good looking chart from bottom left to upper right. There's constant wins in the algorithm. You can see the golden cross. We talked about the death cross. And the death cross here on the weekly happened around June of 2023. And you stayed under there, but you traded sideways. The second you got this golden cross on May 6th, you were trading at, it looks like a 34, and now you're at 43. That's a bullish sentiment right there. Now, the MACD's a little high. It's 2 points above the oscillator. The RSI, little high. So during this time when it's been soaring up, your indicators are a little high. Now, the Bollinger Bands are starting to break out. You can see that bottom one break out. You can see that top one. We're trading at the top of the Bollinger Band. Little bit scary. That means we're extended a little bit, and you saw it on the 4-hour. SCVL, let's see what the quant says about it. SCVL is Shoe Carnival. I don't know how you guys find some of these stocks, by the way. I have no idea. Like Shoe Carnival, I'm not buying shoes at Shoe Carnival. Jacob, who's buying shoes at Shoe Carnival? But quant has it as a hold. And the reason is the valuation. So you go from the chart to the fundamentals. And when we look at this, the PE, 15. The sector median is 14. You look at the PEG ratio, they're not giving anything forward. They don't do a PEG ratio on growth. So let's go and look at the growth. It's a D. And the reason that growth is D, the revenue growth is down 2%. EBITDA growth down 20%. Operating free cash flow, though, the up 296%. So they're doing better with their operating free cash flow. It's just they're not growing revenue. So more than likely, that means they're cutting costs. So, again, the momentum, A+. And the reason is, your 3 month, you're up 20%. 6 months, you're up 44. 9 months, 79. 1 year, you're up 75. Revisions, it's a B-. Let's see, 2 up, none down, 1 up, 1 down on revenue. If we go and we look at Wall Street, what does Wall Street say about this one? They say it's a buy. Let's see what the price target is from Wall Street. $42, which is 3% down. There's 3 analysts covering it. So take it with a grain of salt. Now let's see if there's one that might be a little bit better. Abercrombie and Finch. Abercrombie and Finch, the valuation is still decent. The growth is amazing. Profitability, momentum, revisions, strong buy in the quant. This is an alpha pick. I think it's a recent alpha pick, so I probably shouldn't bring it. Well, no, it's not. It's over 3 months. So yeah, it's an alpha pick. Their average price target, 192. That's 18% upside. So I don't know about Shoe Carnival. Not my kind of thing. So let's see. Brandon from the Facebook group. Anyone know any tickers with a lower PEG ratio than NVIDIA? I keep searching for one, but I don't think it exists. Yes, it does exist. And so I set up a special screener, okay? When you go into Seeking Alpha, and again, this is part of Seeking Alpha Premium, which you get a $25 coupon and a free 7-day trial. You can go in and you can look at this, okay? You can go and you look at when I pulled up this. Now, what did I do? Let's see. We're going to go look at, we're going to look at the PEG ratio. Search results, and I have this forward PEG ratio. I used the forward one. I didn't use the reverse one because I wanted to look at the forward one. And when you look at this, we'll show. I did country, United States. I said 10 billion to 1 trillion, to over 1 trillion. I just said that. I said the ratings, I want the quant rating to be a buy to a strong buy. Seeking Alpha, I didn't care about. Wall Street analysts, I didn't care about. And I said the PEG ratio, I want it to 1.18. And so that's, 1.18 is what NVIDIA is trading on the forward. And so I said that. What did it come up with? Came up with GM, came up with Discovery Financial, AppLovin. Some of these are in the watch list that I have. NRG Energy, UNM. You sort it by quant rating there. But if you want to know the PEG ratio specifically, you go over here to valuation. And then you can do PEG forward. Let's see, PEG forward right there. You can sort it by PEG forward. RGA, Workday, which I think has earnings next week, or they already reporting earnings. Interactive Brokers, you can look at that one. GoDaddy, which has just been a monster of a stock. This one has been a monster of a stock. Now, it's a buy in the quant, but you want something with a lower PEG ratio, it's this. And at 1 year, you're up 131%. Year to date, you're up 53%. 5 days, let's just look at 5 days, you're up 3%. 1 month, you're up 10%. So again, using Seeking Alpha Premium, you can go down these rabbit holes. And we can, and this is ranked number 4 out of 25. What's number 1? Okta. What's number 2? Twilio. What's number 3? Net. Then GoDaddy. So you can go down the rabbit hole and do this, but I set this up so if you have Seeking Alpha Premium, I'll include that scan for anybody that wants it. How long? Let's see. Scott, how long until we see the new portfolio? If anything like core, it will be awesome. So the new portfolio, if you missed it yesterday, what I'm going to do is I'm going to take the market data and I'm going to go over here to key market data and I'm going to use the U.S. equity sectors. So it's U.S. based and I'm going to use these spider sectors, just these things. And I'm going to take a couple of names of the top pick. Take those. You can also use U.S. equity factors, the growth, value, quality, low volatility, high dividend, momentum, dividend growth. You can use all of these and just build your own portfolio. I'll build it in Seeking Alpha. But I wrote back to Scott. I said, when I get motivated, I'll do it. Do I need to reiterate that I'm lazy? I am lazy. I mean, honest to God, I do enough work on this podcast, and then I've got my own portfolio to do. So the point yesterday was, hey, there are different ways to construct a portfolio. Make sure you do it in a way that allows you to sleep. And so building a portfolio with the U.S. equity sectors with the large cap, in my mind, I would be able to sleep with that. I just thought of it yesterday. I haven't built it. And yesterday I went for a hike. Okay, Daniel from LinkedIn, he messaged me on LinkedIn. Just wanted to drop a quick question or topic for discussion. How do you feel about being positioned heavily into Marvell and NVIDIA before they both report at the end of the month? So NVIDIA, I don't care. I mean, NVIDIA just hold. Marvell, I don't know Marvell as well as I know NVIDIA. NVIDIA is one that, in my mind, the valuation makes sense. Let's go and you should just get into NVIDIA. I'm going to buy more NVIDIA. NVIDIA is down in pre-market today. Let's see. NVIDIA is down 1% at 121. I want to buy it under 120. I bought more at like 110, 108, somewhere in that. I was adding this one the whole time. Again, when you get these pullbacks, you want to take advantage of the pullbacks. Now let's look at Marvell. Marvell algorithm had you in at $60. You make 12% over two years in the algorithm. I don't know enough about this stock to say hold it during earnings, but I will tell you, with the 50-day moving up there, with last week kind of being down here, we went back over it. The all-time highs being 92, and you're at 68. Let's look at what Marvell is here in the quant and stuff. Marvell. It's a strong buy from Wall Street. $90 price target. So it's huge. Its valuation and revisions are an issue in the quant. So let's look at the valuation. It's PEG forward. 1.45, a little bit big. So maybe they're worried, maybe, some of this, the leading indicator of AMAT last night, maybe they're not doing too well. Again, I don't know this company really well, but you can see it let's see when the quant moved it to a hold. It's been a hold. It was a buy on September 24th at 64. It's been a hold since then. Yeah. I mean, you can see the whole history of this one if you want to go back. Yeah. I mean, for me, what's my feeling on it? Do I hold it? No. Daniel, How do you feel about it? I mean, the most important thing is, how do you feel about it? Not how I feel about it. Holding them into earnings. I'm an earnings player. I'm a gambler. I don't mind holding stuff through earnings. I know a lot of people who sell out before earnings. I sold out of Target because I'm worried about their earnings next week. And then I lost 5% yesterday, 6%, somewhere around there. So how do I feel about NVIDIA? I think they'll do fine. I mean, I'm not focused on this earnings per se. I'm adding to the position. It's a long-term play. I think NVIDIA is moving from a hardware company, and they're adding software so they'll have recurring revenue. I think that's fine. I think they are still in the lead in AI. I still think when those mega scalers, those hyperscalers like Google, Amazon, and Microsoft, when they say we've got enough compute power, I think NVIDIA pulls back tremendously. But the valuation makes sense. So I don't mind holding it. Marvell, it's a little bit, I'm not great with Marvell. But it's up to you. Don't listen to a douche on the internet. That's you. Nick from Spotify. Hey, Gary, I have a diverse portfolio with stocks from all sectors that are doing good that I'm keeping for the long term, 3 to 9 months, depending on RSI. Okay, long term, Nick, first. Long term is not 3 to 9 months. That's not long. Okay, if you're in a retirement account, 3 to 9 months, you could do that and consider it long if you're concerned about volatility. But 3 to 9 months is not long. Remember, I've still got stock that I've bought back in 2004. So don't think that 3 to 9 months is long. Again, RSI, MACD, they're great, but it depends on what time frame you're looking at. If you're looking at a monthly chart and you're going to say, hey, I'm only holding for 3 to 9 months, it doesn't make sense. If you're looking at a 4-hour and you're holding 3 to 9 months, maybe makes sense, but don't think that 3 to 9 months is long-term. Anything over 1 year is long-term. I would argue 2 to 3 years is long-term. I consider 1 year to be rather short in my time frame. I want to and have been recently getting into day trading where I'm in and out of trades with the 5-minute, 2-hour plus. I base a lot of my trades on MACD, RSI, VWAP, volume, Bollinger Bands. Fantastic, Nick. That's what you want. In my mind, that's what you want. You want those indicators to tell you, hey, I'm going to trade these. The biggest thing that you have to learn about all of these indicators is price trumps everything. Price is the leading guide. So learn your candlesticks, learn how those things move, and then use the MACD, RSI, VWAP, volume, Bollinger Bands, also moving averages. I would add that in. Do you know of any stocks below $50 that move quickly up or down on a given day, like Hood and Lucid? They move 1 to 4% per day. I wrote back, Nick, you have the ability to scan for things like this. I mean, honest to God, you have the ability to scan for things like this. There are scanners out there for day traders. I don't know any of them because I don't day trade anymore, but there are scanners out there. My suggestion is just to do a scan for them because, one of the scans that I do, let's see, one of the scans that I have is I go over here and I've got this bookmarked here. Let's see, pre-market movers. It's investing.com/equity/pre-market. And this will tell you everything in pre-market that's moving. It will tell you the big movers, pre-market top gainers, pre-market top losers. Those are ones you want to trade. If you're looking for something that trades a lot, look at these because you can do what warrior trading does. I put the warrior trading stuff in there all the time. You can trade triple leveraged ETFs. You can trade anything. But Nick, asking me if I know something that moves like this, you're not going to develop a trading strategy like me, and I'm not going to be, using your strategy. Develop the strategy for yourself. Now, the volatility is what you're looking for. Momentum is what you're looking for. I would suggest looking at Warrior Trading's YouTube channel. He's great. Now, as far as Hood and Lucid, both of these stocks are just crap. I will tell you, I don't like either one. But if you're trading them, trade them. Again, I can't give you a list of stocks that trade today on momentum because tomorrow they may not trade for momentum. So you want to scan for those things. If you're getting into that and you know all of those indicators, it's great. I would say, try the triple leverage ETFs, try that investing.com type stuff. Look at Warrior Trading. I think he puts out a bunch of stuff overnight about stuff. Don't sign up for stuff. Don't pay for stuff. I think, if you're going to pay for Warrior Trading, I think it's super expensive compared to stuff that I put out there. But he's got a track record of really being good. He's been, investigated by the SEC because of his promises. So he's pretty careful about that now. But Hood, the valuation's crazy. The valuation is nuts. The PE is 24. The average, sector median is 11. Now, when you look at profitability, their profit margin, 85%. But return on common equity, 4%. Look at the cash flow from operations. They're losing money. Now, momentum, A+. Lucid's even worse. The only reason Lucid went up is because the Saudis put more money into it. This is a horrible, horrible stock. And so it's not one that you can, trade it on a tight time frame. Both of these, I think, in my mind, are junk. I went over why I liked Fidelity. Do you think if I wanted to buy bonds that I could call somebody on the phone with Robinhood? No. They want to be a full-fledged broker. They're not. They're a trading app. And you know what? I actually like Webull better. I have used both apps. I don't trust that if a GameStop situation happens again, that douchebag Vlad isn't going to go to Citadel and go, how can we stop this? Like he did with them with GameStop. He wouldn't allow you to sell the stock. He wouldn't allow you to get out of the stock. Or I'm sorry, he wouldn't allow you to buy it. That's what they stopped. They didn't allow you to buy it. They only allowed you to sell it, which meant the price had to come down. If you're okay with that, that's your call. I don't like the app. I don't like the management. I don't like their fundamentals. I just don't like it. Now, I could be completely wrong in the stock price. But at some point, you've got to make it, plant your flag on that hill. We're pantsless right now. I'm planting my flag right on that hill. And I just don't like it. I really, really don't. Now, scans. We can talk about these. This is in Trendspider UNH. This one has just been a monster of a stock of recent. It's after their earnings. It's come out of a 2-year breakout. You just got out of a 13% gain, gets you right back in at 579. Fundamentals are a little bit stretched on this. We've got some stuff coming up with the election with healthcare. This one will be affected. Cleveland Cliffs, they just got downgraded in the quant rating to a sell. It's down 1%. Be very careful with this. I do have a weekly chart where I show a range on this one. And I don't like this. I don't like the action that this is doing. When you go back to before the pandemic, right back here in, let's see, February, it was a $7 stock. It's a $12 stock right now. Now, the fundamentals do still make sense, so it's not a lost cause, but I don't like the way the market is treating this stock. I don't like it at all. There's a couple of other ones, Sunoco, MHO, which is an alpha pick, Frog, PSIX. We talked about that one having a cross up and an entry in the algorithm. Monster, Comcast, Old Dominion Freight, Lowe's. Lowe's reports earnings next week. Now, Home Depot did great. They said, hey, the rate cuts are going to be great for the DIYer. Well, Lowe's is the DIY king. Again, Home Depot is the professional one. Lowe's is the king. What happened with Lowe's after Home Depot announced? Well, they shot up. Here, this was a 2.99% candle. Just got you out a 7% gain. Algorithm, it makes you even. Buying and holding makes you 20%. So I would argue this is probably a good entry. Your MACD down at the oscillator. Again, if Home Depot is announcing that, hey, it's going to be good for the DIYer, maybe Lowe's is the one you want to play. We got a couple of leveraged ETFs, Nails, Bitcoin, BTCZ, VNQ for the low-cost ETFs. So that's the show. That's it. It's for the week. We're done. Again, we're positive for August. I don't know where the Qs are now. Let's see. We're at 472.79. So we opened up already. It's 941. The 471.76, that should provide you some support because, again, that's where August opened. And if we wind up positive today, great. For me, one play that I want to see this weekend is actually oil. Oil is pulling back. UCO, which is a triple levered ETF on the futures, it's down 2% at $30. I think Iran attacking Israel perhaps this weekend would cause this one to spike. So if you want to trade it, again, I do not suggest holding a triple levered ETF on crude oil over the weekend because you don't know what's going to happen. But if you want to gamble and this is the type of thing I will do in my Webull account, is I will put like, $50-$60 into this thing. Rather than betting on football, I'm going to put $50-$60, see how it does. That's kind of the way I use Webull. It's a sports betting app to me. It's just betting on futures, commodities, and doing triple leverage DTF stuff. It's how I grew it from $1,000 to $7,000 over a couple of years. But I do not suggest it. The $1,000 would not change my life. If that went to absolute zero, it's not going to change my life. But if you want to sign up for Webull, I love their app. I love their trading. I love it. It's right here, the third link down. Again, you have Trendspider on sale. You have Seeking Alpha Premium on sale. You have Alpha Picks on sale. I save you $50 off of that one. The newsletter's free. Get the newsletter. The newsletter's absolutely free during the week. The weekend, you can support me. I do educational stuff on the weekend. This weekend, I'll probably post about, I'm going to put my gamer tag in there so you can play me on Xbox because I got my new Xbox set up. But if you have any questions, you can certainly hit me up. Remember, I do not reach out to you. I do not have a Telegram group. I do not have a WhatsApp group. It is all here on the link tree. This is the central location to get in contact with me. I won't reach out to you. I do not want friends like that. I am not saying, hey, be my friend. I want to help you. No, I ain't doing that. I'm more reactive than proactive. So if somebody reaches out to you and saying that they're me, they're not me. So, okay, take care. Have a great weekend. I'll talk to you Monday.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.